an amazing start of the week. Um, I hope the weekend went on well, and also last week as well went on well. So this is Coach Musa, your digital asset wealth coach, and basically what I do is just like a number of other leaders, or I would call mentors within the crypto trading arena, more especially Royal Q. I train people on how to analyze the markets and have a better insight into the market, come up with an informed decisions with regards to which coin to pick and trade, how much to take as profits, when to be in the market, and probably when to be out of the market. Because not all the time you are supposed to be in the market. There are moments within your trading cycle that you ought to be out of the market and relax, or probably refresh your mind and do other things. Because if you understand the market pretty well, the market has series of cycles within which there are moments in which volatility is high, the moments in which volatility goes low. So at moments when volatility goes low, you either buy and hold and relax, or just be out of the market. Or when the volatility is high but in the negative direction, or in a direction which you don't intend to trade, if you're a sports trader and you trade on the sports market, your goal is to buy low and then sell high. But in the moment when the market is going bearish or is in a moment of downward movement, that is the time for you to relax and be out of the market and wait for the market to stabilize or consolidate before you can dive in or jump in and then take trade opportunities. So ladies and gentlemen, this is a class that we tend to teach. We tend to share ideas. We tend to share knowledge. We learn from one another on how best to be good traders, not only traders based on automation, but how perfect we can improve our trading skill. And when it comes to even adjusting the parameters within the robot to make us get the best out of the robot. That's why we have classes of this nature. So someone may ask why we always tend to have constant classes, constant Zoom each and every day, be it the class, the technical class session, or the compensation plan session where we understand more about the robot and the opportunities that lies within and outside it. Somebody may ask myself that question, but the beauty is, this is a business where we work as a community or as a group and we grow as a community. And the step that each and everyone is going to make in an attempt to move a step further than the others will depend on how you sacrifice and how much energy you're going to put in to go an extra mile to learn certain things that some other people may not have the chance to learn, which will entail a lot of sacrifice. Others, by the way, to an extent of sacrificing some resources just in a bid to make sure you win. Because at the time of sacrifice, sometimes it's painful, but then in the long run or afterwards, the jubilation is endless. So we tend to have these classes so that we empower ourselves. We remind ourselves so that we get to refresh our minds and also make adjustment here and there with regard to certain trading strategies based on experience of what we are seeing in the market or based on experience of what we saw in the market. So we keep on learning few things here and there, good strategies, come out with beautiful and amazing strategies, new strategies, just in an attempt to keep up with the trend so that we can, be on top of our game as traders and also as people who are benefiting from the robot to help them do the trading in automation. I want to roll out this fact not ruling out completely, but I want to bring forth this aspect that even if you have the robot, even if somebody told you that the robot works on autopilot, you necessarily need to do nothing after setting for the first time. You need the knowledge. You need the knowledge. You need time to learn. You need time to understand the business you're doing. This is not a policy business. This is not a return on investment business. This is not a return, or this is not a kind of business where, or probably similar to the one some of you did past, where you are told, put here money, and within 1 week, 2 months, 1 month, you'll have this return without doing anything. This is not the business. This is the business you need to put in some input, put in some knowledge, put in some energy. And the more you put in, the easier it becomes, and the longer is the enjoyment. So we come here, we don't just waste this time. And I also urge you equally not to waste this time. Don't take this time for as a time you're just passing by. You just put your phone on and then you either ride, you're doing nothing. You take it as something not very important. It's one of the most important sessions in these classes. And as a team of Chief Crypto Ambassadors and all the other teams that are under the Crypto Ambassadors, like my team, the Galaxy Crypto Academy, we tend to offer this opportunity, which is not common with other communities engaged in a similar business we do. Okay, so bless yourself and be thankful that you're part and parcel of this community, because it's one of the most amazing communities. It's second to none. So that said, I want us to just bring a background on what we covered in the past, especially in sessions that were run by me. Along the way, we had a little break. I wasn't on, and I believe some other leaders took up, the center stage, and then they helped push on with other programs that is within the community. But then, in accordance to my own program, my lessons, we looked at a lot of things. We really did look at a lot of things. And we built a background of what trading basically is, and why it is very important for you to understand or to have some knowledge with regards to an insight into what is happening in the market of the asset or the assets that we currently trade. We looked at some of the aiding tools. What helps, what makes it easier for us to analyze the market? What are those aiding tools? What are those things we need that makes it easier for us? And among them, of course, we talked about the Trading View, that application itself, which we mostly use to help us have a deeper insight into the market. Then within the Trading View, we have tools, the support tools, where we said we have the drawing tools and then the indicators. And in the course of that, our class, we looked at the indicators specifically. Now, we said there are very many indicators, okay? And allow me share my screen. Yes, allow me share my screen. Okay, thank you. So, let me just see. Oh, sorry. Just a minute. We said we have a number of indicators. And I'm looking at my Trading View. Okay. Okay. So we have a number of. This is amazing. So we have a number of. Indicators, which we said we may not look at all of them, but the specific indicators we selected and we discussed in detail. Now, ladies and gentlemen, you can go through and learn more about all these other indicators, and then choose which one would be of your best choice or which one will be of your preference. And then when you choose an indicator or indicators that you see or you deem fit that could aid in your market analysis. What you're supposed to do is you're supposed to increase your knowledge in them, in understanding it. You're supposed to improve on your skills on how you can use it best. And you also need to actually learn. You acclimatize with it. Get used to it. Use it so often to a point where if you open a chart and then add that indicator on the chart, trust me, the whole thing you're going to be looking at in the market would be a lot of light. You can tell just by mere opening the chart and putting that indicator on, you will be in position to tell that this is a good trade, or the market is in a good trend, or this is not the best moment to be in the market, given what I'm seeing, without even going into any other details of the trend lines, like that. You can just open and then say this is a good trade. This trade is at a very good opportune time that I can jump in, or it's at a very dangerous stage where anytime soon the market may go against me. So let me relax. That is what you gain. So you choose an indicator and then you increase your knowledge in it. We have very many leaders around who can help you grow in those areas. Now, for us, with regards to our class, we have chosen for ourselves specific indicators that we try to explain and make you understand better and how you can use them. And among the indicators we used or we selected, which I discussed, were one, we looked at the Bollinger Band. We looked at the Bollinger Band, this indicator, and we explained it in details and how you can use it. So for those who were in the class, it should be important to remember. We looked at the MACD, what we normally refer to as the moving average, convergence, and divergence. We looked at how we can use it to analyze the market, identify trade opportunities, when and how much to take, and then exit the market. We also looked at what we call the stochastic RSI, the stochastic RSI, or that the stochastic relative strength index. Okay, we looked at its importance and how we can basically use it. And on top of that, we looked at this other. We looked at the auto Fibonacci, and I think for those who did attend the class, these videos, if you missed some of those classes, the videos are in the YouTube channel. You can find it in the Crypto Ambassadors group. You can as well find it in the Galaxy Crypto Academy YouTube channel. Any of those, you can find those videos there. You can go and then go through. Just take 1 hour of your time and just sit quietly with your headset somewhere quiet and then try to follow, just to recap and then have a better understanding about them. So we looked at the auto Fibonacci. We looked at how you can draw it manually. You can use the manual, and then you also looked at how you can put on the chart the auto one, the automated one. And we also looked at the adjustments you make, on those indicators. Now, those are the ones for me, I felt were necessary and be very important and user-friendly that anyone can use to analyze the market. Now, we have others. The others that I believe that were shared on the call in my absence, but I was following, was the pivot point standard, which was shared by Leader Julius. Yeah, it was one of those. And then the other indicators that we have not of late shared so much with people, but in the past we used to. One of them being the Gartley predictor indicator. And the one that most often is not used by very many people is what we call the smart money concept by Lux Algo, this one. It has a lot of things that you need to understand about the smart money concept. It needs a lot of explanation for you to understand how they can be easily used. Okay, so it is called the smart money concept by Lux Algo, and it's an amazing indicator as well, very amazing. It needs a session of its own because there's a lot of things that we need to understand with regards to, we talk about, the failure, swing, those fair value gaps, those other change of characters, the break of structure. There are a lot of things that it incorporates in it that makes trading most amazing, So it will need a session of its own, and then, yeah, you can learn more about that. Okay, so basically those are the few indicators we chose, and I believe there could be others that I probably did not explain. Maybe the moving average that were discussed by Julius. So that were with regards to the indicators, and then for the drawing tools, when we're looking at one of the analytical tool that supports our analysis, we looked at the trend lines, and we did deeply discuss about the trend line. Okay, how you can draw, because we said the trend line is more of support and resistance. And then we saw how you can draw this trend line horizontally to give meaning to your chart, how you can draw it on a particular trend to just aid in monitoring that trend, and as well identify trade opportunities, when to enter and when to exit the market. Okay, you can as well use it in monitoring a trend that is rising or a trend that is going down, and still identify trade entry opportunities. You can use that same to identify points of breakout, which will determine your take profit percentage. You can identify points of support, which can determine your entry, points within the market. So it's something we looked at in details. You can as well go to the videos and then go through. But the beauty is, in the next class, or probably, if not next week or in the course of the week, they will start all over again, these classes, okay? So the only thing you need to do, if you want to learn from first hand, okay, you want to hear everything from the horse's mouth, first hand information, then you will never have to miss these classes, which starts at 7:30 and probably ends around 8:30. Sometimes it goes to 9, depending on the intensity of the training or how wide the information that was intended to be shared was. Okay, so that's what we looked at. Now, there are a few things that today I wanted to do as I summarize this class, because this class normally runs for 2 weeks, and then it repeats itself. But there are key things that I want to bring forth with regards to what we share. Okay, and I want to just bring you the aspect of the trend line. The trend line. Ladies and gentlemen, excuse me. What you need to know, and I repeat, because I'm repeating this because I've been getting people come to my inbox, and for them, what they would want to do, like they would always want or prefer to analyze the market at that very time and even enter the market at that very time. And when the market does not show them what they want, because there's a difference between what you want and then what you need. Okay? So what you need to know is this, that the market sometimes may not fare the way you wish it. That is what you need to know. It may not go as you planned. Okay? But you must know that sometimes the best thing you could do, try to draw this trend line earlier. Establish your support and resistance earlier, so that later you can just go back onto the chart on that particular asset that you intend to trade and see so far how the price has fared. So that from that point, you're able to tell whether it's the right time to jump into the market or still wait a little. Okay? And this is what I'm going to demonstrate. You draw this support and resistance, establish them. I like emphasizing it because this is the real price action. Support and resistance is absolutely the real price action. The indicators, as we said, are just they support this price, the actual support and resistance for the trend line. They just support, and once they support and you find you find out real points of confluence. That is when you increase your level of confidence and say, you know what, this is the best. I think I am good. I am in. It supports your decision. It supports your analysis. So the real deal is on on support and resistance. Now, I'm going to demonstrate the simplest way of how to draw a support and resistance. The best way of drawing support and resistance, you have to follow the following steps. Number one, choose a time frame in which you would like. That's the first thing. Choose a time frame. Let me pick my drawing tool. Okay. The first step is time frame. For you to come out with the best trend lines or a good trend line that will help support your analysis, you need to actually begin customizing and your preferred time frame for analyzing the market. Like, it is a common mistake mostly done that most people think they can just go about looking at all time frames. It is okay. If it is your way of doing it, it's fine. But what I do recommend, even for those who are starters, those who intend to ride through this journey into the trading space, you need to begin customizing your strategy. The first thing is identify the time frames of preference. If it is 1 hour that you know you're going to be capitalizing on in having a bigger picture of the market, and then you'll be trading in the 15 minutes time frame, come on, do it. If it is 4 hours that you want to make your analysis from, and then capitalize on either 1 hour or 30 minutes to identify earlier trade entry opportunities, come on, do it. It's entirely up to you, but customize your time frame. So the first step is picking a time frame. If you choose for yourself a time frame, number 2, identify that the second one. The first one is time frame. Second one, identify your market price, your current market price. Your current market price. Current market price of that asset you intend to analyze. That's the first thing. If you've chosen for yourself 1 hour, okay, that's well. Go ahead and then identify the current market price of that particular asset. And in this regard, we would identify that this is the current market price of the Jupiter coin. It is currently trading at 1.2410, about there, though fluctuating. But at least that is the location of the market price. Then the third thing you're supposed to do, with reference to your market price, identify the most recent swing high of the market or on the chart. The most recent swing high is also the same as higher high. The most recently registered with reference to your market price. And when I talk about that, this is what I mean. You would simply draw an imaginary line in your mind, okay? An imaginary line, or you can actually do the actual drawing, okay? You would just do something like this. You may pick, like, for example, a horizontal line, put on where your market price is. You can even use a dotted line, right? Just an imaginary line. That is it. Now, you know, that line is in reference to your market price. This is the market price, and that is the imaginary line. So, the first thing, draw an imaginary line with regards to the market price. Okay? Now, the fifth one, I hope you're noting it. Follow your imaginary line and identify your, first, after drawing, I said was to drawing the imaginary line. The fifth thing would be to identify the most recent swing high. I said the first one is time frame. The second one is the second one would be identifying the current market price, right? The third one would be identifying, drawing imaginary line with reference to your market price. The fourth one would be identifying the most recent swing high, or what we call the higher high. Now, how do you identify the most recent swing high? The most recent swing high is identified by following your imaginary line, which is the reference to your market price, right? So with reference to that imaginary line you've drawn, the first high, the first peak you encounter, the first peak you encounter. And when you talk about a peak, that moment when the market price was rising, and then it encountered some resistance, and then it had a U-turn. It started moving to the downside. The first peak you're going to identify, you're going to encounter, draw there your first line. Draw there your first line. Okay? 6. Draw your first line onto the first encounter of the swing high or the peak. Meaning you're going to identify the candle within that peak that had the highest high. Then you're going to pick your horizontal line and put it on the peak or on the tip or on the high of that longest candle. So meaning we're going to come here, to check here, we shall have to, with reference to this imaginary line, the first A peak we are encountering is this point. And I just wanted to understand something. So we have two candles here which are long, but there's one which is more longer. Okay, so that candle which is more longer, you're going to draw the line to touch its high. I believe you are now familiar with the anatomy of the candle. The high, the low, the open, the close, those structures, yeah? Now you're going to draw a line there. So pick a horizontal line and draw. Put it on that, and then that one would be a line. So you can even let it be a white line. Now, that first line you've drawn with reference to your market price becomes what we call your first point of resistance. Your first resistance line. It is the first point you're going to pay attention to with regards to price action. It is the point which should, in your mind, be the most likely point where the market price is going to encounter a rejection. It will be rejected. Don't assume it is going to go through. Just assume that from the look of things, since in history, the market price rose and was rejected here, there's a possibility that the next thing is going to happen, because in history of trading, history repeats itself. The same event that happened in the past is the most likely event going to happen in the future. So you need to pay attention to it so much. Okay? So after drawing that, that becomes your first resistance line. Right? It is the first resistance line. Then identify your second resistance line and draw. That is now the sixth point. I mean the seventh point. The seventh point is with reference to the first resistance or R1, you're going to follow through your resistance 1. The second peak or the first peak you're going to encounter with reference to your first resistance, okay, you're going to draw there a line. And the line you're going to draw will be your resistance 2. Now let's follow it up. We're going to go through in history. If at all we shall get, we shall draw there. Just a moment. All right, sorry about that brief break, but I hope you're following. If you're following, okay. Okay, can you guys hear me now? Is the sound still breaking? Is it clear? I hope it is clearer now, right? Let me hope all that I was sharing was being heard. Yeah? Was it being heard? Okay. It's been clear all along. Okay, thank you. Okay, thank you. Okay, all right. Okay. Thank you. So, okay, that's okay. All right. Thank you then. At least I won't repeat whatever I was sharing. Okay, so after okay. So let's go. Let's come back. Let me first close this. Just a minute. Okay. All right. So ladies and gentlemen, I hope I'm clear. Daddy. Okay, so after drawing your first resistance, sorry guys about that. So after drawing your resistance, the first resistance with reference to the current price, you're going to identify your next swing high with reference to the first resistance. And to identify the next swing high, you're going to follow through this first resistance. The first point you're going to encounter will become your swing high, or what we call the higher high. So you'll draw a line there and label it your resistance. So let's go through and identify. Let's see if we shall find one. Let's see if we shall find one. We're just going to go through slowly. Yes, here we are. So with reference to this, we would qualify our second resistance at this point. If you look at this line closely, the first encounter can be 2 points. It can actually be 2 points or even one, depending on how you're going to look at it. The first one to me would be this point, and the second one would be that point. So this would be second, this would be third. To me, if we check on this very well, okay, if you were to monitor through this movement, you may realize that after this movement, that after this sub movement, right, to this point, there was a break of structure all the way to this point, right, to resistance 1, that first line. Then there was a correction, or there was a pullback or retracement before we experienced the second break of structure all the way to this point. Then there was another pullback, right, back to the resistance 1, and then another break of structure all the way down. So to me, this would be an ideal R2, right? This will be an ideal R2. This will be R2. And then this, we can qualify to be our R3. Those three are enough for me. Those three resistance line will be enough, okay? So I'll just pick my trend line, horizontal line, and I put there. That will be resistance 2, and then resistance 3 will be there. And I'm good. Then I come back to my current market price. So I've established my possible points of price action. If at all the price will break through, I know how the path is most likely going to be. So the most likely path would be that in case the market price comes from my current market price, in case it successfully breaks through resistance 1, I know my next destination where the rejection may occur will be resistance 2. And if it does reject the price, that means I may have a little pullback. And if it is still a continuation of an uptrend, I will experience the second break of structure at R2, and then the next rejection is most likely going to occur at R3, which if it is successful, I know there will be a retracement. And if it is still a continuation of the uptrend, I will experience a break of structure past R3, and then most likely get maybe the next rejection at R4, if at all I can establish as well. Like that. That is the most likely path that will happen, if it is like that. But for now, I'm speaking with regards to the market price. So I look at this point with a magnified eye, okay? That I will not take this point for granted, this R1. The price may break through or it may reject the price, and then I will see another reverse downward. The same way it happened here. As simple as that. Now, I've just established the resistance. Let me come and establish my support area or points of price support. Now, when you're going to establish points of price support, this is how you go about it. The first thing you're going to do, still with reference to your market price, meaning you need to identify where your market price is, right? And then go slowly down. Go slowly down. Now, as you go down, identify any peak which may be in between. Let me just bring. Let's identify any peaks in between here in history. Any peak that was, when I talk about a peak, we want to identify something like this. This becomes a peak, okay? But as long as it is below the market price, because we assume at the moment this is where our market price, not only assuming, so anything below it becomes a support, right? So we want to identify all those support points, but how we're going to identify the support point, we shall have to be identifying a peak like this or a swing low. So we identify this or this, but as long as it is below the price, the market price. So this is what I mean. So we're going to come down, identify anything like this in history or anything like this, okay? All right, so in this case, when we come down, the first peak we are going to identify is this, right? So we're going to pick our horizontal line and draw a line there. Let it touch the high of that candle. That caused that, because we can see now that we had this from this movement, there was this movement, then there was a rejection back down, and then before we saw a break of structure. So this qualifies to be our support number 1. There's no any other support in between apart from this that we see. So we have established our first support. Second support, we're going to draw it with reference to our first support. So meaning we're going to go down. Sorry. Okay. So we're going to go down as we follow through our support 1 and identify any point that is like this. Any point that is like this, or that is pointing downwards. Any of the one that we shall approach first, we're going to draw our line there. If we come across this first, we shall draw our line there to establish our second support. If we encounter this, we shall draw a line there as well, and then qualify it to be our support 2. So we're going to see as we look out for these 2 signs, just come down. The first point we're going to encounter as we follow through will be this point, right? Which is a V, right? So that means this is where we're going to draw our second support. So pick this and draw, put it there. Put it on the low of that candle. we have our support too. All right. We have drawn our support too. We have drawn our support too. If you're following, let me see one on the chat. If it is simpler, if it is making sense, let me see one on the chat. Amazing. Amazing. Yeah. That's amazing. Okay, so as simple as that. It's trading has not to be hard. It has not to be difficult. Nothing has to be difficult when it comes to price action or market analysis. It's really simple, very simple. Right? Just needs the time and your dedication and trying your willingness to learn. Right? Okay, so let's go back. So we have established our support 2. To draw our support 3, we are still also going to make reference to support 1. Right? Make reference to support 1. We're looking for a V or an inverted V. Any of those that we come across first, we are going to draw our line there. So if we come across V, we are going to draw our line on the peak of the V. If we come, on inverted V. If you come across the inverted V, we're going to draw our peak, a line on the peak. If we come across the V first, we're going to draw it at the bottom, right? So let's come back with reference to second support. Let's look back. Let's follow through our support 2. And the first point we're going to encounter is a V. As we can see, it is a V. So meaning we shall draw a line at the bottom. Yeah. So pick this. Put there. Bam. Ladies and gentlemen, I have my 3 key support level and 3 key resistance level. And with that, I am good. I am ready to monitor through and see how the market price is going to fare on approaching these areas I have demarcated. Now, in the look of things, if I am a trader, you can decide to use the very same time frame if you want to trade long term, right? You're not worried about the time it is going to take for the market price to deliver. You can base on the very same time frame, right? You know very well that this is the market price. You can decide to enter at current market price, right? Which in which case, if you do so, you just put at the back of your mind that you'll have to establish margin calls. So from the point of entry, you're supposed to measure down this distance. The percentage you're going to get here from your current market price to support 1. Establish it as your margin call drop. Go and set it on the robot. Let it be first call. If it is too big, split it. And I'm going to show you. So if it is really it's not so big, if it is within the range of 1 to 2 or 3, you can just put it as your first call, depending on your capital anyway. But if you have enough capital, you can split it up into 2 or 3, depending on what the percentage is. So let's try to measure what percentage this is. Let me come and pick this and then just measure this from here all the way to this. This is about this is about 10%. Now this is too huge, right? It's huge. It's huge. So you're going to be forced to go to a lower time frame to see how you can establish, how you can split up this, right? How you can split up the 10% drop. You have to go to a lower time frame. Yeah. Yeah. So what's going to happen? I hope my network is not interrupted. So that is the distance. That's the percentage drop. So if you decided to go to make entry at current price, that means you need to go to a lower time frame. Okay. If this percentage is big, you have to go to a lower time frame and see between your market price and this first support. Do I have any mini support along the way or midway? That's the question you want to ask yourself and answer from there when you go to a lower time frame. Do I have any mini support? And to find out whether there's a mini support or, so you will be looking out for NV that was formed in between in history, or NV, sorry, that was formed in between, or any inverted V, because you would want to establish your mini support as well. So this is what it means. So you go to for like 15 minutes time frame. So you're in between. You see, you are in between. So what happens? Come down, follow through from your current price. Just come simply down. You're looking for a V, inverted V, or a V itself. The ones you come to approach first is where you're going to establish your first mini support, the first mini support. So we're going to follow through the market price. And then I think the first inverted V we're encountering is this, right? Do we see this? Do we see it? Pick your line. Just pick this, put it there. Choose another color, probably this, and then let it be dotted. That's your first mini support. So from this, you know that if I want to distribute these margin calls, so from my point of entry to my first mini support, this is about 3%, roughly about 3%, right? So I'm going to put my first margin call drop to be 3%. Intentional, because you're not sure whether the whole 10% will dip, right? It will dip all to take up all the 10%. It may just dip midway, and then it makes a U-turn, and you see the market surging, just causes this U-turn. So it may just dip briefly here in an attempt to retrace and then go. It may not really come up to this point, but you're just preparing your mind. You're trading intentionally. You are trading as a professional trader. You're not an amateur anymore. You're not doing things out of the blue. You're not doing things out of imagination. You're doing it in real time, right? So you do that. Then you want to establish your second support, just in case the first call is bought. The first drop, the market price drops to 3%, and the robot buys that position. You want to see if it continues to drop, when should the robot buy the second position, or the second should make the second call. So you're gonna identify the next support, and if you're establishing the next support, we say you're looking out for a V or a what? Or an inverted V. So with reference to the first support, if you come down as we follow through, we're going to come across a V, which is this one here. So draw a line. Draw a line. Put it simply there. Now you can measure simply from V1, from support 1, mini support 1, to the second support. What is that percentage drop? This is about 3.3. So you now have two margin calls, one at 3.08 and another at 3.3. So in either way, where the market price drops to, the robot will buy accordingly, because that is what you would have instructed the robot to do. That buy at 3.08, then also buy at 3.3 in case the market price continues to go where? Down, right? Then the last one, you can even see this. You can establish the third one around here. This is the third V, right? Do we see that? The third V is here. If you can see here, this is the third V, sorry. This is the third V. So that is, you measure that distance again also. Tap, and then, sorry. Do this, you measure from here. You're measuring from here. And you can see, it's making a U-turn. So you measure from second support to this point. This is about 2.05. So you have the 10% distributed. If you go back to the 1 hour, you're going to see how you distributed it. Did you know there existed those mini support points? I bet you didn't know. But at least now you know. You now know. And if you want to establish the last one, you still measure. You identify the next support, and you have all the 10% covered. What is difficult in that? What is difficult in that? Let me see on the chart. What is beautiful there? What is, so difficult there? Is there anything difficult? Is there anything difficult in that? You're trading not just as an amateur, not just like somebody who was just told, you know, there's money in trading and you're gambling here and there. Eh? You really don't know what to do. You're crying. Oh, my upline left me. Hey, yeah, it is true. Some upline leave other people. Hey, they leave you. Hey, sometimes it may be because they saw that you are unserious. Yeah, so hey, they leave you, they run away. Yeah, unteachable. You're not willing to learn. He's conducting a class, busy seriously in class, wants you to be there, and you're nowhere to be seen. You're nowhere to be seen at all. And then you begin, hey, my lifeline left me. Oh, he just did this, got commission and ran away. Hey, this is a personal business. Let me tell you, ladies and gentlemen, this is about, don't complain about any upline. Take upon yourself an initiative to learn. Your upline or whoever brought you or showed you Royal Q has indirectly introduced you into the trading space. Has just introduced you into this trading space, has given you an opportunity, a blank check. How much you're going to write on it depends on you, right? So it's up to you. It's up to you. It's like taking you in the wilderness and then say, now begin from here. If you say, and if you sit down and say, now I'm going to die, you will die. If you say, I'm going to move out of this wilderness, I have to look for a way and begin wandering about the wilderness, you never know. You're going to chance into a road or something, or a tree, a very cool one at that, where you'll sit under and then rest. But if you just sit there and say, now I'm gone, you are gone indeed. You will be gone. So it's about you beginning to take responsibility. Whoever showed you Royal Q has indirectly brought you into trading. Yeah, has shown you that please trade. This is where the money is. This is where people are making money. You need to embrace the opportunity. Then sacrifice. I like talking about sacrifice. My friend, to us to reach this point of learning solidly how the market price is analyzed, we sacrifice. Leader Julius knows. Even some small. I remember back then when things were hard and everyone was running away because people thought Royal Q would just print money just like that. Without, you putting in some input. When the bear season or years came by after the 2021 bull run, people ran out of business because they found themselves in a very big floating loss. As people who are responsible, we need to take chances and learn. We went an extra mile to learn and understand the business. We knew it was not just all about Royal Q. It was more than just Royal Q. And that's why today we can smile, we can laugh, we can share singing, we can trade, we can make money, even without talking to anyone. You just wake up at 3 a.m. anytime. Let me go to the market. Check. Do I make money? You make money at will. At will. Anytime you want, however you want, and how much you want. It's entirely on you. Without talking to anyone. But because sharing is caring, sometimes we go ahead to share with other people about the Royal Q thing. Yeah. Opportunity, not thing, but opportunity. So it's entirely up to you. Don't cry about someone who brought in Royal Q. The person has introduced you into the business. It's an opportunity. Take it up as your own. Let me tell you one thing, and I hope Leader Julius is here. I really hope. You see, when Julius showed me Royal Q, in 2021, it was in July, I remember, July, the month of July, 2021. I think he knows it very well, that what I did was what he didn't expect. I took Royal Q as my own business. I relied less on him so much, but we relied on each other so much again. Less on him, but with each other again. I don't know whether you understand what I mean. He had to help me understand the Royal Q business opportunity. Then I had to put it upon myself to go an extra mile, to go independent, though under the same umbrella. Why? Because I knew if I didn't learn, If I didn't, how am I going to talk to someone? And then what am I going to tell them? You know? And that's why I went an extra mile of learning all this and sacrificed even resources. So it's introducing you. Introducing you is one thing, then taking it up is another thing. Okay? Why some people fail and think ROIQ does not work is because they think they have a mindset of the return on investment. The things that banged them, where they are told, put money here, tomorrow you'll be a millionaire. And they did, and then boom, it crashed. Yeah? Because, you know, they have that mindset. They don't want to learn. The people don't want to learn. And it's very worse with some of our Ugandans people. They want easy money. Yeah? They want easy things. Eh? They want anything that involves sacrifice, time, word, resources. They run away. They don't know in the long run, it's one of the most amazing things that lives with you forever and you die with it. Okay, now I'm teaching my children, by the way. And sooner or later, you may see my son teaching some of you here. My firstborn is 13, making 13 years now. He understands that whenever I'm teaching, he's always around. Whenever I'm trading, he's closely monitoring how things are moving, how the chat is and asking questions here and there. And, you know, why? Because I know someday I may not be there. Also, I may not be here all the time. There are moments that I may also want to concentrate and make money. Because that moment is there if you're a trader, honestly. You can be silent somewhere, make money, and you don't blow about it. You don't make noise about it. But you will be making progress, you know. So I want them to take up and follow that footstep. They shouldn't fall victims of the scam some of us fell in. This money will be used for trading. Which kind of trading you don't want to know? You don't understand. You just say, okay. They use it for trading forex. They use it for trading stock. They use it for investing in crypto. I mean, and for you, you are very comfortable to give up your money to be used for trading when you can actually do it. So I laugh at most of the people sometimes when they approach me with some of those opportunities. So, ladies and gentlemen, to cut the whole thing short, it's learning is magical and learning is powerful. He who learns teaches, and he who teaches becomes a pro. Okay? So learn, teach, you become a all-round person. Okay? So embark on teaching, embark on learning, put it upon yourself. 2, 3 months, 4 months, 1 year, learn. And then the rest will be okay. Because if others are doing it, why not you? And how exceptional is you? You can as well be that kind of person who knows how to trade, who trades responsibly, who trades with intention, who trades when they are supposed to trade, not trade because they have to trade. No, you should trade when you have to trade. You just have to know when to trade. Okay? Yeah, you just need to know when to trade and how much to take from the market and when to be in the market and when to be out of the market. Okay? You need breakfast, go into the market, make $25, $30, $40. You're done. The day is done for lunch or break, and then now make something to save because you have to save. By the way, make money and save, and use part of the saving do investment. Make money, save, do some other investment, some other personal development outside trading, outside ROIQ, outside crypto. Do other tangible investment. Buy land. I love the fact that sometimes testimonies are shared here. Let's not just listen to those testimonies. Let's pick something from them. Okay? Buy some land, buy some animals, but establish farms. I mean, it's something is you're preparing for your retirement, my friend. Time waits for no one. And life is short. And life today, you're there, tomorrow, you're not there. But establish, put something so that a footprint can be left, something that your family and your loved ones can remember you for or remember you with. That it is because of this, that's why this happened. Don't just use it to take it back on yourself, eat, buy things, buy expensive clothes or what, without putting assets. Any moment of establishment is important, but establish tangible things first. Surround yourself with assets, and then the others will follow. So that is that. As I'm summarizing now, as I go back to summarize, I know that was worth it, but let me come back. So I hope that is very clear. Now, your intention of doing this support and resistance is, sometimes you may enter immediately, or sometimes you may just wait for it. Like these lines I've done, I'm going to wait, I'm going to monitor it through for about for the entire week. And if the price at all comes and goes past this, past these three resistance, I'm going to be forced to establish more and monitor. Because I know in the future or anytime soon, the market price will again drop and follow the same path, will be reacting to these lines. If it drops to this, I may be forced to establish more down. Why? Because I know at some point it is going to follow the same path as it is on its way up. Okay, so it's just for monitoring purposes. Okay. Now, if you decide not to enter at current price, what do you do? Let me show you. You have identified already that the market price currently is on the verge of approaching a rejection point, right? And you're not very sure whether it will be rejected or not. So what you're supposed to do, identify your market price, then go to a lower time frame, identify your first support point. Where your first support point or line is going to be will be where you're going to establish your entry point. So you're going to look out for the market price at that support. And good enough, the market price is normal highlighted. When you go to the price lane, any line you draw highlights the price where that line has touched. So it's just a matter of coming back here, look at the price, okay? And then the price you see there is what you're going to set as a preset price, okay? As your preset, or the price at which you may want the robot to buy. Okay, so that means it will be a moment of waiting. Allow the market price go up, don't chase the market, then wait for it to come back to you. Once it approaches this point, then what is going to happen? Then the robot is going to buy. So in the event that the market price on approaching this mini support and it reverses and begins going back up in your favor, you will see yourself in profits and as early as possible. But in case it goes down, you know that from the first support, you would have already established your second support. So the distance there would be your margin call drop number 1. Because you entered from 1, so the second one will be your margin call 1, the margin call drop for the first call. And then third mini support will be the margin call drop for second call. Okay. Yeah, so simply you do that, and then so you measure this distance. I'm doing that because you were supposed to go to a lower time frame, but I'm only now measuring because we already did that in the lower time frame, yeah? So you just wait here. Then from here to here becomes the margin call drop for the first call. Then from here to here, second call, from here to there, third call, like that, okay? So that's what you do. That is if you enter at preset. Now, my advice is, having identified your support, your first support or first mini support, if you want to enter at a preset, normally measure about 0.25 to 0.5%, okay, of that support. If this is the actual support you identified, measure 0.25 or 0.5, about there, of the support, okay? Let me just do that. That's the strategy I discovered, and it works perfectly well. You measure 0.25 or 0.5, roughly about 0.5 to 0.6. Now, it is at this point where the preset is going to be, not at the actual support, but somewhere slightly above the support, okay? And then anything above will now be your TP. I don't know whether you see this. Why do you do that? The market is funny. At times, yes, we prepare in advance, but at times, remember, when we talk about support or resistance, we don't necessarily just mean a line. We talk about an area, okay? An area. And we should always be very careful when you're establishing these lines, because we know we're talking about an area. And an area can be somewhere like this, somewhere exactly at that line or somewhere below the line. Okay, it can be somewhere below the line, just slightly below the line, or it can even be somewhere above the line. So that captures the area. So it becomes a support area. Not exactly at that line, at the support line, but it can be slightly an area somewhere above or somewhere below. So as the market price is dropping, or as the candlestick is coming down, it may not necessarily touch that particular line, but it may come and dip within the area. Or it can even come and just touch the upper part of the area, or the lower, it dips below up to this lower point, or just a space within. Still, it is an area. So why you establish it slightly above the support line, simply because you want, if the market price comes and does not necessarily reach the line, but it comes to the area, either to that upper part line or to the area in between, you are still covered. The robot will be in position to swing in action and buy. So you want to be left out, okay? But if you were concentrating on the support line alone, if the market price just dips slightly and then, it goes back to the previous trend without touching your support line, that means you even have to wait longer, let the price go, and you only wait for those moments when it will again come back in its way down. Okay, so but to avoid that, to avoid missing out, that's what I would recommend. That's what I recommend to my team as well. Okay, so with that said, ladies and gentlemen, I hope you learned something in our class today. Oh yes, you can trade with trend lines alone. For me, I do, but you should confirm your trades. You confirm your entry, but you can do. If with the time, the more you get used to these things, you can do. You can really do. You can trade. The trend lines are real price action. You can trade with them. Yeah. Yeah, I think that is good. So you use the support area, make your area covered. Don't just concentrate on the line only. Yeah. So with that said, ladies and gentlemen, unless there is anything crucial, but I think I've summarized my class. So if you don't hear me again, just relax. The other leaders who may come on, yeah, I will also be busy with my team and other stuff, trying to also make them learn. But I will always be available anytime I can step in. I will always be stepping in, and yeah, because we started this program, but along the way, people, you begin concentrating in your respective groups. Yeah, but we started this from day one with Lydia Julius, and we came a long way. It's I would say this is, I think the morning class we started is 2023. I don't quite remember very well, but around there. So it was a session that many did not know, but we would do it very early, 7:30 to around 8 and like that. But I'm glad to be your trainer this morning and your mentor as well in this journey. The last thing I can only say is, please trade responsibly. Don't overtrade. Set your trading goals always. You trade when you need to trade. Okay? Don't trade because you have to trade. Even for those who trade using signals, trade only those specific signals. Don't finish up all your capital because they're dropping 2, 3, 5 signals. You want to enter all the signals. A good trader picks up a signal at a time, make sure that they distribute the capital accordingly, and have a reserve so that in case that particular signal they enter, by chance, the market price begins going against it, because anytime the market can change, because sometimes it's driven by sentiment. So in case it goes against you, have a backup capital to buy, to allow your robot buy the margin calls, the different price level as the price is going down. And as you do that, it will help make it easier for you to run away, or at least have very little chances of floating losses. And eventually, if the market price bounces back, you are able to get out of the market faster and earlier And sometimes in the long run, you can even make more profit, you know, as the market is on its way up, because the robot would have bought margin calls along the way as the price was going down. And in so doing, it would be bringing, you know, it will be narrowing the gap between average price and the market price at that particular level. So it will have only little moments of movement and you'll begin floating in profit. So you trade responsibly, and I believe all will be well. For those in floating losses, just relax. The market will recover and you'll be out soon. If you have more capital, try to open some small margin calls so that the robot can continue buying. The more it buys, the more the average price, the distance between the average price and the market price is brought closer, and the higher the chances of you getting out of the floating loss faster. From me to you, God bless you all. I remain Coach Musa, and a leader of my own small team, Galaxy Crypto Academy, a team of about 1,900. It's a small team, but it's worth it. Back to Leader Julius, if you're on, please. I give you back the mic, say a word or two, and then we end the session for today. So back to you, Leader Julius, if you're there. I don't know, are you there? Oh, I'm the host. I think he's not there. Yes, yeah, but it's well. Yeah, let's end there for today. If I get a chance, maybe tomorrow I may be there. But if I don't be there, I believe the other leaders who may step in and do justice to whatever we covered over the weeks. Yeah, I end there. Peace. Yeah, you can as well. Before I do that, please, you also go and support. You go and subscribe. You'll find this video is going to be dropped on the YouTube channel as well. This is the YouTube channel, Galaxy Crypto Academy. You can as well subscribe, subscribe. Yeah. And this is the group. It's called Galaxy Crypto Academy on YouTube. So you can go subscribe, watch some videos there, just to learn, because we keep on learning. Not so many videos, but you can take something from the videos that are already there. So thank you very much. See you.